cost of living crisis and the pressure that New Zealanders are under. And that's why you're seeing us cut the wasteful spending and actually bring inflation interest rates down. And finally, the economy's growing again.
The Australian dream has always been about owning a home, a place to call your own, a backyard for the kids, a roof to retire under. But that dream is slipping through our fingers like sand. In Sydney, Melbourne, and Brisbane, house prices have soared to levels that defy logic. The median house price in Sydney is now over $1.4 million, nearly 10 times the median household income. To put that in perspective, a young couple earning a combined $120,000 a year would need to spend decades saving for a deposit, only to drown in mortgage payments that eat up half their income. This isn't affordability, it's insanity. Learning from New Zealand's nightmare. Across the Tasman, New Zealand has already lived through this horror story. In 2021, their housing market was red-hot, with prices skyrocketing 30% in just 2 years. Auckland's median home cost $1.2 million, and families were borrowing at rock-bottom interest rates to keep up. Sound familiar? But then the bubble burst. By mid-2024, house prices in Auckland and Wellington had crashed by over 20%. Homeowners lost hundreds of thousands in equity overnight. Families who bought at the peak were trapped, owing more on their mortgages than their homes were worth. Construction ground to a halt, and the economy shuddered. Even when the Reserve Bank of New Zealand slashed interest rates, the bleeding didn't stop. Why? Because when a housing bubble bursts, no amount of rate cuts can glue the pieces back together. Australia's mirror image. Now let's hold up a mirror to Australia. Our housing market is walking the same tightrope. The median house price-to-income ratio in our major cities is creeping toward 10, a level that screams severely unaffordable. In Melbourne, a modest 3-bedroom home now costs over $1 million. In Perth, prices have jumped 20% since the pandemic. First-home buyers are being squeezed out, forced to rent or move to outer suburbs where infrastructure barely exists. Meanwhile, mortgage stress is spiking. With interest rates climbing from near zero to over 4%, repayments for many households have surged by 40%. For a family with a $600,000 mortgage, that's an extra $1,000 a month they didn't budget for. Groceries or the mortgage. That's the choice too many Australians are facing. The policies fueling the fire. Why are we in this mess? Because our leaders keep pouring fuel on a burning market. During the pandemic, the Reserve Bank of Australia slashed interest rates to historic lows, making borrowing feel like free money. First-home buyer grants and stamp duty concessions pushed more cash into an already overheated market. Immigration is at record highs, 660,000 new arrivals in the last year alone, adding pressure to a housing supply that's already choked by restrictive land policies. These aren't solutions, they're recipes for disaster. Every policy seems designed to keep prices climbing, even as affordability collapses. Politicians cheer rising house prices as a sign of economic strength. But for young Australians, it's a door slamming shut on their future. The construction crisis. The warning signs are flashing red. Australia's construction industry is buckling under the weight of soaring costs and shrinking demand. Building material prices have spiked by 30% since 2020. Skilled trades are leaving the industry, burned out by unprofitable projects. Over 2,500 construction firms have gone bust in the last 2 years, leaving half-built homes and shattered dreams in their wake. In New South Wales alone, 45% of insolvent builders have folded. New housing approvals are at their lowest in a decade. When supply dries up but prices stay sky-high, you get a market that's unsustainable, a bubble waiting to pop. The debt time bomb. Here's the scariest part. Australian households are sitting on a $2.7 trillion debt bomb. That's trillion with a T. During the low-rate pandemic years, families borrowed massive sums, thinking they could handle the repayments. Now, with rates rising, millions are stretched to breaking point. Distressed sales are creeping up as homeowners try to escape crushing mortgages. But with fewer buyers able to afford these prices, the market is freezing. This is exactly how New Zealand's collapse started. Too much debt, too little affordability, and a market that couldn't sustain itself. The demographic storm. Australia faces a unique threat that makes our situation even riskier than New Zealand's. Our population is aging fast. Baby boomers are retiring and downsizing, flooding the market with properties just as younger buyers are priced out. This isn't a gentle wave. It's a tsunami of supply meeting a drought of demand. When prices start to wobble, this demographic shift will accelerate the fall, leaving homeowners with devalued assets and nowhere to turn. The human cost. This isn't just about numbers, it's about people. Imagine being a young couple who scraped together a deposit, only to watch your home's value plummet below your mortgage. Picture a retiree whose life savings are tied up in a house that's suddenly worth 20% less. Think of the trad-eye who can't find work because construction has stalled, or the family forced to choose between rent and food. This is the human toll of a housing crash, and it's coming for Australia unless we act. A path to recovery or ruin. New Zealand's crash, as painful as it was, forced a reset. Their median house price-to-income ratio dropped from 11.2 to 7.7, making homes more affordable for the next generation. Mortgage repayments fell from 50% of income to 35%. Painful? Yes. But it laid the foundation for a healthier market. Australia, meanwhile, is charging toward the edge. Our leaders could choose a controlled correction, easing land restrictions, rethinking immigration policies, or cooling speculative buying. But instead, they're doubling down, pretending rising prices are a win while ignoring the cliff ahead. We're standing at a crossroads. In 12 to 18 months, Australia's housing market could start to unravel, triggered by rising unemployment, higher rates, or just the sheer weight of unaffordability. When it happens, the fallout will be brutal. Trillions in household wealth erased, businesses collapsing, and an economy in recession. But it's not too late. We need to demand policies that prioritize affordability over short-term gains. Share this message. Talk to your friends, your family, your local MP. Because if we don't act now, the Australian dream won't just fade, it'll shatter. For more on how we can avoid this crisis, check out the video linked below. Let's fight for a future where home ownership isn't a privilege, it's a possibility.